Hello, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Friday, April the 29th, 2008. The headlines out of Switzerland this morning read, dollar fell against major currencies ahead of key economic data, FOMC, and rate decision. The dollar fell against a basket of currencies on Monday, breaking a three-day rally as buyers retreated to the sidelines ahead of key economic data and the Federal Reserve's policy meeting this week. Analysts said the dollar would likely stay confined to current trading ranges, awaiting a push from either the Federal Open Market Committee, the FOMC, statements, which are accompanying its interest rate verdict, or the first quarter growth numbers, both due on Wednesday. Policy-setting FOMC is widely expected to cut the benchmark overnight lending rate by only 25 basis points to 2% at the end of the two-day meeting, and signaled that its interest rate cutting campaign is over for now. Growing speculation that the Fed might stop cutting interest rates and a rise in the U.S. stocks on takeover deals earlier lifted the dollar, and global sentiment improved last week amid stronger than expected U.S. corporate earnings and a growing view that the worst of the credit crisis has passed. The euro dollar climbed to 156.56, snapping a three-day decline, but it still was below last week's record high of 160.19. The dollar yen dropped to 104.11 after touching 104.82, an intraday high. The dollar Swissy was lower at 103.37. The pound dollar rose to 199.13 after posting 197.81 and 199.65, an extreme low and high. Comments from European Central Bank's officials repeating their warnings about persistent inflation lent the euro mild support. ECB President Jean-Claude Trichet and Governing Council member Yves Mersch both said risk to price stability remained on the upside, with Trichet adding that there were no grounds for complacency. Their comments suggested the ECB is not ready to start cutting interest rates from 4% soon, even with regional data pointing to an inflation slowdown in 4 German states for April. A surprise jump in a gauge of German consumer sentiment also helped the euro, as it indicated that the Eurozone's biggest economy may be in better shape than indicated by last week's weak IFO business conference survey. The dollar was range-bound in the Asian session as traders were looking to stay on the sidelines before the FOMC meeting on Wednesday. Low volumes have been seen across all asset classes, which is not surprising given the uncertainty and importance surrounding the Fed's announcement. The market is expecting a 25 basis point cut. However, there is speculation that the Fed will actually hold rates until they see more compelling data. The dollar yen is near a 2-year high and was able to rally late in the Asian session after an early morning sell-off. U.S. stocks closed mixed as investors turned cautious ahead of the Federal Reserve's two-day meeting starting today. Many expect the meeting to wrap up with the Fed's cutting rates one more time, but then putting its easing cycle on hold. Initially, U.S. stocks rose for what looked like the fourth day of gains after Warren Buffett financed the $23 billion takeover of Wrigley, and investor Kirk Kerkorian bought a stake in Ford, boosting confidence that the market will gain as earnings improve. However, in the last hour of trading, stocks gave back all intraday gains to close lower as buyers failed to close the S&P above the key 1400 level. Gold and crude oil futures finished firmer. The Asian markets were higher in the early morning, with Hang Seng up, while the Nikkei is closed today. PIMCO will be trading credit derivatives for its first Asian local currency bond fund as the CDS proves their appeal. European futures are trading below fair value, approximately 15 basis points on average, mainly due to U.S. stock retracements during the last trading hour and also because Deutsche Bank announced this morning another major loss. A light calendar for the continent will have markets subdued. In the U.S., Case-Shiller House Price Index and Confidence Board's Consumer Confidence will provide the first real event risk. Given the market's newfound optimism in the greenback, these figures could easily damper the goodwill. These are two areas that have seen significant weakness with little signs of stabilizing. In addition, weak confidence means that U.S. households will spend less of their tax rebate than originally anticipated, choosing to pay off debts or to save or offset spiraling energy costs, with only a small portion heading to discretionary spending, as was hoped. Analysts believe that many Asian central banks will continue to raise interest rates as concerns over inflation stifle those of growth. That concludes our news for today. We hope that you're finding it beneficial to your trading, and we appreciate your viewing. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. Also, you'll find a link to our Yahoo forum, also called Succeed in Forex. We hope you'll visit us there soon. We hope you'll be able to join us again for our next Forex Market News broadcast. Until then, have a great day and happy pipping.